Good morning, everyone. This is Ryan Etner with your Wednesday, September 25th morning market commentary. Let's start off this morning with the ethanol report coming out. Let's look at previous ethanol reports here. What we want to focus on this chart are all the numbers in the bold, the weekly percent change. We see a lot of negative numbers in this category, and that's running below last year's levels. To meet USDA expectations and to provide a little bit of support in this market, we need to see ethanol run right at last year levels or higher. And now look at the bottom two numbers on this chart. We see 2 weeks ago we were plus 0.3%. Doesn't seem like a large number, but any positive number is what we want to see for an ethanol report recovery. So that was 2 weeks ago. But then we see last week back to negative 4.6%. So as soon as trade could get a little excited about ethanol, took away some of that excitement last week. So if we're looking at today's ethanol report, that's the category we want to look at once again. Can we run at or above last year's ethanol production pace? That's what we need for a little bit of support from this report. Now let's switch over to weather maps. We are just starting to hear some more market commentary about weather maps and potential delay to harvest. So in that category, let's start off with the 6 to 10 day temperatures. This is where the temperatures are the coldest on the weather maps. There is some talk from various weather forecasters about the cold reaching Minnesota, Iowa, etc. But we see on this morning's run, the cold still maintains the worst over Montana, and of course that includes North and South Dakota as we see on this map as well. What we are seeing is a change from above average temperatures back to normal temperatures for, say, Minnesota, Iowa, or even Missouri, but not switching to below average temperatures. So we wouldn't say it's concerning there yet. For temperature portion of maps, we'll keep our focus on North and South Dakota, where they will be falling below average next week. Now turning over to the same 6 to 10 day map, but this time precipitation. This is the map that is starting to catch attention when talking delayed harvest. Basically, trade just saw some of their first reaction to delayed harvest yesterday in the corn market. We do see some obviously substantial totals from Missouri, Iowa, and northern half of Illinois. And also we have lesser totals in North and South Dakota and Minnesota as well as Wisconsin, but still this much rain and this large coverage, yeah, we are starting to get some talk about delayed harvest. This will pick up even more attention if this much rain is still in the forecast come around when we get back from the weekend on Monday. So we'll see if that is still out there and if we can still make a conversation for a delayed harvest case there. Lastly, one more map to take a look at. This is 5 to 8 days out snow. This map has been keeping most of the snow over the mountains, but we see this latest update from 2 hours ago. It does include snow for North and South Dakota. Now, we are hearing some forecasters saying that this reaches all the way out to Iowa. We're not seeing that on the GFS maps, but we will point out what we are seeing, which is 5 to 8 days out. This morning did put some decent snow totals out there for North and South Dakota. Of course, this early in the year likely to only fall and melt in a day or two, but if someone does want to talk snow in the forecast, this is what we're seeing from the official GFS maps this morning. Now let's turn over to cattle after talking weather there. Some substantial things to talk about in cattle. We have a show list that's down 20,800 this week. We normally would have expected plus 10 to 15,000. As soon as this show list came out on Monday, futures immediately we went to assuming a $3 higher cash trade. In fact, what we're looking for is futures factoring in seeing a 103 bid in Kansas, Texas today, resulting in a 104 trade. So that's a $3 above last week's 101 trade. Now, what we are finding interesting here is previous cattle on feed reports would have told us to look for 3 to 4% higher slaughter over the last 2 to 3 weeks. And so far, what we've seen is only 0.7% higher slaughter. So the bigger numbers that we were expecting to come in and pressure this market, they're simply not happening. In fact, seasonally, the top end of the slaughter numbers, the time frame for that has already come and gone. So we'll see what we get here. I mean, we are working on a lower show list and expecting $3 higher cash cattle this week. So let's look out for those bids. Again, trade looking for a 103 bid and a 104 trade in cattle this week.